Welcome to another video from Creativo Solutions. You're currently watching the Finance for Non-Financial Managers series. Please post comments and questions below and subscribe to the channel and you'll be the first to find out when new videos are uploaded. Visit the website for more content and resources to help you. We also have an Instagram page, Twitter and YouTube channel, and those can all be used to keep in touch with us on social media. In the first video, we spoke about what is finance. The purpose of this video series is to give you all the knowledge and skills so you'd be able to apply finance in your day-to-day lives. Remember, the definition is about the art and science of managing money to achieve specific goals. We know companies are going to have limited resources and they need to maximize those resources by allocating it to different places in the business. Why do they do that? It's to achieve goals. In order to achieve goals, we need managers that are going to have the financial skills in order to make informed decisions. The information is key. We can't make good decisions without reliable information. And that's what we're looking at here because we're trying to achieve business goals. So who's involved in that particular process? Depending on the size of the business, you'll either have a very large financial management department, so normally we refer to that as finance, or a very small finance function. But the function is important for a business to operate because the business needs resources in order to operate. So who's involved with that department? Well, there are many different role players. To give you some examples, the first is managers. We have managers for different areas in the business. It could be IT, it could be legal, it could be sales, marketing, it could be any of the departments in the organization, and all of them are going to require financial decisions in terms of maybe investing in new areas, maybe improving or upgrading the systems or the equipment. It could be a whole host of different reasons why they would need to make a financial decision. But managers are important and they deal internally with decisions relating to allocating resources. Then we have shareholders. Shareholders have invested their capital in the business. So they're holding equity in that particular organization. It could be a company, and therefore they're looking at a return on investment. So when looking at who's involved, the shareholders are the ones who hold a stake of the business in terms of shares that they have in that particular company. So the shareholders actually provide the equity and they're wanting a return. So shareholders are existing shareholders that currently own a part of the business. We also have investors. The investors are the ones with resources that we want to try attract. So in order to attract an investor, we need to show them a business plan perhaps, or a plan of action, or maybe different projects that we're wanting to implement, different strategy that we're trying to execute on. So an investor is a potential financier where they're providing capital. If we then persuade the investor to invest in our businesses, they then become a shareholder. CEO is the main decision maker in a business. Why? Well, the CEO is going to be the chief executive officer and they're going to be making the final decision in terms of, are we going to go with this project? Yes or no. So they're the decision maker. Okay, they're going to decide how the company is going to operate. What direction is the company going to move towards? Government is also involved with finance because government would be there to assist in terms of resources. They could provide the company with resources, but the government's also collecting taxes from those companies. So government acts as a role player in the financial management process because companies need to be aware of how much taxes they're going to pay, or maybe what resources can they access from governments. And finally, I've put a note here about competitors. Competitors are also involved in the financial management process. If we think about finance, remember resources are limited. So your competitor may want to raise a certain amount of capital in the market. And if you're a competitor in that industry, they're then going to have to either incentivize their shareholders to invest in that business, or they're going to have to do something that's going to make their argument more meaningful and resonate with that investor. If the competitor is also looking at operational things, well, we know financial statements give us information about the business. And if we've got information about the business, will be able to compete more competitively. So having the financial statements or the annual financial reports of those public companies can assist us with our strategy, because that allows us to have a look at their internal operations in terms of their financial management decisions by looking at their financial statements, their statement of comprehensive income, their statement of financial position, statement of changes in equity, and even their cash flows. We can take out a lot of information from that, and we can then make a decision in terms of how can we compete to stay relevant in that particular market. And the biggest reason why all of these role players are part of the finance function, it's because they're there to make a decision. The decision making is key. So financial management is focusing on using information in order to make good decisions to maximize the return. It could be the return for the owner, or it could be return for the greater good, the society at large. Financial services industry. Well, we know that the department is going to have to utilize certain products and services that can only be accessed through the financial services industry. So when looking at who's involved with finance, we're going to have banks, we're going to have insurers, we could have asset managers, pension funds, we could have a whole host of different role players in the financial services industry that helps contribute towards the decision making. The first is obviously transactional products. We need transactional products to operate as a business. So when dealing with finance, the business is going to be making use of transactional products. They could be normal current accounts or transactional accounts that the business will be utilizing in order to run their day-to-day activities, or it could be loans and accessing capital. So when looking at commodities, it could also be an area that the financial services could be dealing with in terms of offering a market for those particular assets. So the financial services industry, yes, it can provide capital, but it also provides us with access to certain products and services. So we may want to access certain commodities, okay, or financial products, and that assists us with operating. And the most important is obviously the raising of capital. So we know capital is necessary for a business to operate. Capital could be debt or equity, but we know companies are going to require it in order to operate. So many different products and services can be assessed in order to help managing money. We need the skills of the financial services professionals in order to achieve specific goals. So when finding out more information about transactional products, we're going to have to approach the bank perhaps. When approaching someone in terms of raising capital, the investment banker would assist with that process. And if looking at commodities, well, then we might have to consider some economics relating to which assets are going to be needed going forward, or is there a demand for those particular assets. Those assets are obviously going to be utilized as part of operations. We've reached the end of this video. Please subscribe to the channel and hit the thumbs up button to like the video. And if you subscribe, you'll be the first to find out when new content is uploaded. If you have any comments, please post them below. Thanks for watching.